I'm Charlotte McLeod with the Investing News Network, and here today with me is Adrian Day, president of Adrian Day Asset Management. Thank you so much for coming.
Well, thank you for having me, Charlotte.
Great. And we last spoke with you about a month and a half ago about this Sprott event. Since then, we've seen gold continue to move higher. Was this something that you were expecting? How do you feel about gold's price right now?
Right. Yeah, I mean, it definitely moved a little faster and sooner than I thought it would. But this is a base that's been building for a few years, really, and especially since last August, a year ago, was when it bottomed and started moving up. I think what you saw was a fundamental change in change in the way people are viewing gold. So people were apathetic, and then they became hostile, and then they become the sentiment has turned much more positive. And I think what happened is you've just got so many people standing on the sidelines, and when gold started to move up, more and more people started to jump on before they missed it. And so you had this sort of rather sharp rise in gold. I think gold is, at this point, where we've seen a pullback, obviously, in the last few days, but I think it's vulnerable to, let's say, bad news, that is, bad news for gold. For example, if the Federal Reserve decided not to raise interest rates, or if Trump and China suddenly sign a trade deal, you can decide which of those are likely. But if something like that happened, I think gold is vulnerable just because it's moved so far, so fast. But having said that, it's clear anecdotally, it seems clear that there's a lot of money still on the sidelines. And the thing about gold, remember, for most people, not dedicated gold investors, but for most people, they put a small part of their portfolio into gold, largely as a hedge. If you're putting 3 or 5% of your portfolio into something as a hedge, you are far less price sensitive than if you're an investor who's focused on gold. And that's why, when you're buying insurance, you don't care too much about the price, so long as it gives you the coverage. And so I think gold can easily have these sharp moves up.
One thing people have been asking around this show is this the real deal for this move in gold? Would you say yes in that case?
I think definitely it's the real deal, if your words, not mine.
Yes, thank you.
The real deal. And again, largely it's because of the change in sentiment. And remember, most people are grossly underinvested in gold. Underinvested meaning they don't own any. Most generalist funds, mutual funds that are not dedicated resource accounts, don't own any gold. And this is completely different from 15, 20, even 30 years ago before gold took off. 25, 30 years ago, you could look at any fund, a small cap growth fund, they'd have some gold stocks, or a big cap global value, they'd have a couple of gold stocks. Those funds don't have any gold in anymore. And the more gold continues to move up, the more people are going to think they ought to have something in gold. So yeah, I think it's fundamentally changed.
What do you think about, we're seeing some very extreme gold price predictions. What's your thoughts on those types of very high ones?
I think some of it is simply to get attention, frankly.
Sure.
You said 3,000? Okay, I'm 5. You said 5? I'm 10. I don't, it's funny, I'm not trying to avoid the question, but I don't really look at what price is gold going to be over a certain period of time. I can tell you the price of gold if you tell me the value of the dollar.
Right, okay.
And so, if the dollar declines much more rapidly than perhaps it appears at the moment it might do, then gold could easily go to several thousand a year. And remember, on an inflation-adjusted basis, we're still under $800 from 1980. So, there's a lot of room to go up in gold. Let's just put it that way, a lot of room, and we're only at the beginning now. So on an inflation-adjusted basis, we could easily double before we get to the 800 level.
Okay, you've been mentioning sentiment a little bit. We're sitting here right now at the Precious Metals Summit in Beaver Creek. What's your sense of how people are feeling at this event?
Okay, good question. there's obviously two types of person here. There's the investor, whether they represent a fund or a family office or whatever, and then there's the companies. Definitely people are much more optimistic or positive. Definitely people are much more positive about gold than they were a year ago and before that, and you see that just in the numbers. There are more people here. I think the companies, is particularly the junior companies, and this is primarily for junior exploration companies, this show, those companies are much more optimistic than they have been for a long time. Remember, those companies have found it very, very difficult to raise money at anything like reasonable terms over the last several years, really the last 4 or 5 years in particular. At this show, they are now having meetings with people who are saying, yeah, I'll fund you when you do a placement. And of course, the guy doesn't say, yeah, I'll give you a call on Monday, you don't know it yet, because they're out of money. So the companies are much more optimistic about their ability to raise money. They're also much more optimistic about being able to do joint ventures with, larger companies. A lot of these companies will raise money and drill their own projects. A lot of companies, however, will look for partners to come in and drill the property, spend their own money. And it's been very, very difficult to get partners on projects for the last 12 months. Very difficult. But here, there seems to be a lot more interest in that, from mid-tiers as well as from larger companies.
So would you say they should be feeling that optimism about raising money, about partnering? Is that actually likely to happen?
Yeah, that's a good question. I mean, as we were talking before, at every show you go to, a lot of these exploration companies get very excited because they had a meeting with Newmont, or, hey, Barrick asked us for a meeting, and they get very excited. Let's not forget, Barrick probably has 30 meetings. They're not going to do 30 joint venture deals when they get back. So a lot of it is, just seeing what is available, and there might be some project somewhere that fits, that they're looking for. But that doesn't mean they're going to do all 30. So I think to some extent that optimism is a little, I won't say misplaced, but a little overly optimistic. But there is no question that I think the other thing that's happening now, if I may, is we know that Barrick, after the takeover with Rand, or merger with Rand, and Newmont after the takeover of Gold Corp, we know they both said they have a lot of projects to dispose of, and they haven't started that process yet. So a lot of companies, small intermediates and junior producers are waiting. So rather than look at exploration companies that they can take over, they're waiting to see what comes out of the big boys that maybe they can pick up there. Because typically what Newmont and Barrick are going to be disposing of, obviously it's not going to be their crown jewels, but there may be going to be some good mines just in jurisdictions they no longer want to be involved in. Newmont's already said they want to reduce the number of jurisdictions. So it might be a good an existing mines, cash flow positive. And so companies at the intermediate stage are saying, well, let's just wait to see what's available before we spend all our money on some deal with, Ajax Exploration or something.
So as we see those properties start to be picked up, do you also anticipate we'll see more mergers and acquisitions and that type of thing? Or are we have we reached the end?
Yeah, I don't think we've reached the end. I think what we'll call the mega mergers, the ones I just mentioned, Barrick and Newmont, I'm not sure we're going to see another one of those in the near future. But I think what we're more likely to see is the larger companies taking over second-tier companies, intermediate producers, and the intermediates merging or taking over other intermediates. So there's a lot of opportunity in the intermediate and junior space for companies to merge. I think there's less real opportunities among the seniors. Let's face it, when Newmont bought Gold Corp, you have to ask what exactly was the synergy. There was no synergy. And when they were pressed on this point, they said they thought they could come up with $200 million of G&A synergy. $200 million for a company that size is nothing. And it's very telling that the only synergies they could come up with were G&A synergies, but there were no property synergies. And I think investors are a little bit, well, you saw it with Newmont Goldcorp. Investors were very, investors were not overly enthusiastic about that deal because there were a lack of synergies. Barrick and Randgold, there really weren't many property synergies, but there were management synergies, which perhaps is just as important. I mean, Barrick picked up the best, in my mind, the best CEO in the business. They picked him up, and they couldn't have got it if they hadn't bought the company. So you could say that was a synergy. Yeah, but I think you'll see more synergies among juniors or intermediate companies when they merge.
Okay.
It'll be because there's a synergy of some type.
Okay. Going back to the juniors, we haven't seen very much share price movement there, or maybe not as much as some people would have hoped. What will it take for that to happen, and is it tied into any of the other developments in gold that we're seeing?
No, I mean that's a good question, and I mean I think most investors know, but it's important just to set the background.
Yeah.
Typically, when gold takes off, the big producers move first, the intermediate producers move second, and then the smaller producers and the exploration companies are the last to move. They are the last to move always. And so in a way it's not really surprising that sector hasn't really moved yet. It's not surprising at all. What is interesting though, and again, it's not unusual when the gold price moves, is that exploration stocks, junior stocks, will respond when they have something really positive.
Okay.
And so we've seen that with Great Bear or whatever, or we see it when Eric Sprott decides to take a placement in a company. The stock responds. Whereas a year or 2 years ago, a lot of companies put out some very good results and the stock price didn't move at all. So that's changed. But it's only affecting the specific companies at the moment. And an awful lot of companies, good companies doing good work, their stock price has actually gone down in the last 3 months. What will it take? I think it's just a matter of natural progression. As the next leg up in the bull market, maybe gold goes from 1450 up to 1650, 1750, and then you'll start to see more interest in the juniors.
Okay, you mentioned the bull market, and people seem to have different ways of defining a bull market. Can you share what you look at when you say, yeah, we're in a bull market, or we're in this phase of it?
Well, the definition, defining the bull market is actually in a way less relevant to me.
Okay.
I think when I look at gold and I say it's in a bull market, I mean arguably this is still a continuation of the bull market that started in 2001 after a pretty significant and longer than normal mid-bull market correction. You could argue that. What I look at, the most important thing to me to say, yeah, this has changed, is when gold actually responds to positive news that's positive for gold, which might be negative for the world at large, right? Like a nuclear bomb going off somewhere. When gold actually responds to positive developments and doesn't respond very much to negative developments, that's a signal, and that's true in any market. It's true in the broad stock market or technology market or whatever. And that's a sign that sentiment has changed, and so it's a sign that investors are now either looking to sell or looking to buy. And I think now investors are looking to buy. So that means bad news for gold, correction, but a shallow correction, because people are just looking to buy. They're on the sidelines looking to buy.
Okay.
Does that make sense?
I think that makes sense.
So.
Yeah. Okay. So that was a lot of great thoughts on gold. Before I let you go, though, can you tell me what other metals you're looking at right now, or other areas?
Yeah. I mean, obviously silver, along with, because silver's a poor man's gold, and silver tends to have exaggerated moves, especially at the beginning of a bull market, when gold has moves. I think people need to understand that the silver market has changed dramatically from what it was 20 years ago. And so, whereas, 2, 3 decades ago, most silver came from primary mines, today something like 75% of the silver comes from second as byproduct. And that's important because what it means is that if I'm a lead producer in Bolivia and I have a byproduct silver, I don't increase my production of lead because the price of silver's gone up, and I don't cut my production of lead back because the price of silver's gone down. Meaning supply is much less sensitive to price on the way up and on the way down. And so silver is much more sensitive to investor changes than even is gold, where jewelry, etc., is a major part. So I think when gold, moves up, as I say, to 1650, 1700, a lot of people are going to be moving into silver. And of course, in the stocks, there's a lot fewer silver stocks than there are gold stocks. So those stocks tend to be even more leveraged than the gold stocks. So that's one. I'm a big bull on copper. I don't think it's imminent, but the thing about copper that's essential to understand is that copper mines tend to be large projects. They take time to develop and begin production. And I think we can say with pretty much certainty that nothing will be produced, there will not be a significant producer of copper in 5 years' time that we don't already know about today. And if you look at the potential production in 5 or even 10 years, you would have to have a dramatic reduction in demand for copper not to move up significantly. That's a long-winded way of saying a supply shortage is coming in copper, and you can see that. And I'll just, if I may, give it not an anecdote, but back that up. Richard Atkinson, the CEO of Freeport, and Freeport is the largest publicly traded copper company in the world, so, I mean, he knows whereof he speaks. He said they'd put a moratorium on new projects because of the price of gold, the uncertainty in China. They wanted more certainty before they developed new projects. So they put a hold on all new projects other than brownfield projects. And someone asked him a question. He answered, he mentioned a particular mine, which is shovel-ready according to him. But he said, even our shovel-ready project, if the board of directors gave the go-ahead today, it would be 5 years before it produced copper. 5 years for a shovel-ready project. That's just an illustration. And this was a small project in a good jurisdiction. It wasn't up in Grasberg in the mountains or something. That's an illustration that you're not going to get copper production coming out of the blue. It doesn't happen. Gold, it can happen. Because a gold deposit, even with the new permitting delays and environmental and everything else, a gold project can come into production, a couple of years after discovery. It's not true of copper.
Okay, thanks so much for that. I think we'll leave it there unless you have any final thoughts that you would leave investors with.
Yeah, my one final thought actually, and this is, I think if you're a long-term investor in the gold space, I think one of the dangers is to sell too soon. Because we've been sitting on this stuff losing money for a long time, and then you see something go up 25% and you're so happy, and the danger for us who've been around is selling too soon.
All right, so everybody should be careful. All right, thank you so much. That was great. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Adrian Day of Adrian Day Asset Management.